Hi there, traders. This is Brad Gibble with FX Market Insight for Thursday, the 26th of March. All right. Now, I've got my main desktop computer back online. I think it's starting to show signs of a virus of some description as well. Now, just looking at the general markets right now, the data up the top here, fundamentals are not really still coming into play. The main action is the equity markets. US equities rallied, or the Dow Jones did anyway. The NASDAQ fell. But we're starting to see the currencies really starting to trade technically very well. As you can see here at the moment, the currencies have pretty much settled down as well. And this is because we've seen a bit of a flush out of all the initial sort of trending positions that were in the market. Now, I was calling this the other day, and you can sort of, this is more of a gut feel. You can actually see what's happening. The Aussie was trading sideways. It popped up above, I think the initial level was 58, sort of 60. Now it's topped out just below 61. You've seen the same move across the board here. So Kiwi above 59. We've got Euro still sitting up here, probably more on its highs than anything else. And we've seen a big correction there, almost a 5-cent correction on sterling. And it's now sort of trading sideways. So to me, right at the moment, there's a couple of pairs here, which I think this is the short squeeze for Aussie Kiwi in particular. I think Euro will sort of join in, and probably sterling. These are all performing the same. And we saw that sort of dive or a bit of a drift lower in the dollar. Now, to me, this is just a correction of an imbalance in markets, in trading positions. I think we're going to start to see these things start to roll over again. There's no change in sentiment overall. I think the dollar keeps moving higher. Dollar CAD, it's gone so far. It's now in a bit of a catch-22. Oil sitting at 24 bucks, 24 and a half. I think dollar CAD for me is probably out of it at the moment. Aussie and Kiwi look like they are in the groove. And if I just come back, you're really sort of coming back to adjust your charts to sort of, you know, what's been happening of late. And you can see sterling had a couple of cracks to the top side, with no sort of levels on the top side here. Like the next level is 130, 136. I think you'll find a lot of traders adjusting their resistance to the recent highs. So you're looking at probably 119.14. Euro, well, I'm not going to adjust that resistance line because it hasn't come back down below it. But we've got a bit of a short-term support line here now around 108. If I blow that chart up, it'll look a bit better. Aussie and Kiwi, let me just get some of these arrows off the charts. If anything, it's broken through that level, right? So we've got a very short-term support level building here. But if anything, it looks like it's already broken back down. And I would pretty confident Aussie's not going to go mental to the top side. Like, there's a lot of bad things happening fundamentally in Australia and New Zealand with big lockdowns, etc. But also, they've already had ongoing weak economies before this all started. Now, the Kiwi as well, entering a 1 month long lockdown. That's going to be pretty instrumental. And once again, you've got this resistance level here at 63.72, right? Like 500 points away. So I'd say once again, you're going to find traders moving their resistance line to the recent levels. If I blow that up, you'll start to see where we've got a pretty good bit of structure. So, and even dollar yen, right? It's coming back down to test this level. But we are in a geopolitical head twist, right? So what you do is you get false breaks both sides. So to me, well, dollar yen, I know it's sort of a bit stretched here, but we may see a little breakdown. Like it's just false breaking across the board. And let me just come back here, just tighten up a couple of these charts so you can sort of see what I'm saying. The like euro, okay, doesn't look like it's finished yet, right? This does not look like it's finished and wants to play. Whereas the Aussies had the squeeze and lower. This, to me, looks pretty good, okay? I still like the idea of getting short. Kiwi's done the same, but really it's starting to drift sideways. I think it's only a matter of time before it breaks back down. As I said, Euro, not really sure there. And then you come back to look at sterling, right? We've sort of topped out just above, well, up here at 119.75. We're coming in, going from here. If anything, we've got a very short-term support trend line building. You can get very aggressive with the trend line and sort of start putting one in here as well, which would make a bit of sense. I mean, it's trading big ranges, but that's what we've got to deal with at the moment. So I'm still dollar bullish overall. I'm trying to isolate the pairs that do make sense. And if I just bring you back to the daily trade routine, just having a look at the overall market, and then I'll come into the active pairs that I can see at this point. Now, we are as I said, in the middle of a massive geopolitical event, probably the biggest we've seen ever. But the currencies, the major currency pairs are trading technically very well, right? So respect the levels. What we're trying to gauge, and this is the hard part about the driver being geopolitical, momentum comes from left field. But what we're seeing is less, updates as we go forward. Well, I mean, we're getting continuous updates about what's going on, but the shock and awe components of the coronavirus pandemic are already out there. So, right. So there's not, this is new, this is happening. This is, we're just getting updates as we run through. So to me, we're getting less shock waves at the moment. We're still waiting for that US $2 trillion stimulus package to be rolled out. The active pairs for me at the moment, well, I still like sterling, Aussie and Kiwi on the downside. And to me, dollar yen topside makes a lot of sense. The pairs down here on my watch list, I've taken dollar CAD completely off. It's sort of like a bit of a in the middle of nowhere sort of thing, even though it's massively higher. Euro and dollar Swiss don't really seem like they're giving too much away at the moment. Whereas, sterling's probably slightly in that, but to me, Aussie's probably the better pair on the downside. And you've got these two pairs here with a fair bit of structure technically as well. All right, now macroeconomic data. Well, once again, we've got a bunch of things coming out, but I'd say none of them are really going to be consequential, I was going to say, but I don't think they're going to matter too much. Once again, it's going to come really down to the equity markets as we move forward, right? So if I just bring you back to the risk on, risk off profile, the currencies here not doing a hell of a lot. Now, if I just change this to current day, let's come back up here and try and get that correlation matrix into sort of recent markets as opposed to having it, backdated a month ago. We want to sort of see where it is right now. Now you have to leave I think it's just over a week or 10 days if you're using the daily period for your correlation matrix. That's where it sort of comes back into play. Actually, where are we now? 26, yeah, Monday, that should be okay. Now, just as it calculates, we're just having a look here at what's going on. Yeah, you are seeing uniform sort of weakness on the, say, this should be a risk off situation. The Dow up would be a risk on situation. So these don't match up with what's going on. Okay, you got to follow the news. And why are the yen crosses doing this? Because the Japanese equity markets are down 2.3%, and that's influencing the yen and yen crosses, right? You can see that very clearly. Now, what we have to do is wait for probably the North American session to come back online. It's all about this stimulus package, right? So just having a look at the correlation matrix, nothing there is really lighting up, right? We've lost the clear correlation with the equity markets and the currencies. That's dissipated pretty much across the board. So don't keep running in for that risk on, risk off situation. It's not completely active just at the moment, right? Just having a look at the treasuries, US treasuries, as that calculates. You're also coming across, you want to keep abreast of what stimulus packages are coming out, right? So I'll bring you over to the news, and it's really about this US $2 trillion sort of stimulus package. It's going to be pretty important to the next step for the dollar. I think some of the currencies may be waiting. This is like waiting for the non-farm payrolls, right? You're waiting for the big number. So they're waiting for the penny to drop to see what happens. But look at the 30 years, 10 years, 7 years, like the bonds. Okay, of course, the Fed are in there doing a hell of a lot of work there. Heavy lifting. That's still ongoing. And if I just bring you back across, as I said, waiting for the non-farm payrolls is what happens, and the currencies go into a bit of a pause. Well, that's exactly where we are at the moment with the US Senate, right? Debating the $2 trillion coronavirus bill. They're also limiting their troops offshore, and then you can come back in here and have a look. There'll be bits and pieces about different pairs. Basically, either on one of two things, the US stimulus or the coronavirus impact, right? That's all it is. That's all we're waiting for. And when you come back to waiting for the impact of that, it's going to be on the equity markets. So you can follow that very closely. Now, equities will either rally, okay, if there's a huge amount of more stimulus, or they'll fall if they're not overly happy with that. And as you can see, the Japanese equities are shifting around all over the place. It's not easy trading by any stretch. All right, guys, that's pretty much it from me. Apologies for the last day or so. I've had some major computer glitches, which is a bit of a nightmare, especially when things are kicking off. All right, guys, have a good one. We'll see how these things play out. Cheerio.